The stock market is crashing.
On April 2nd, millions of investors woke up to a nightmare. A 15% plunge in the S&P 500. No warning, no cushion, just pain. Overnight. That's the gut punch Donald Trump's 145% tariffs on China delivered last month. This weekend, Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer are set to meet with China's economic czar, Vice Premier Lifeng, in Geneva. This isn't an ordinary meeting, not just to discuss tariffs, but to potentially rewrite global trade rules. We're staring at a pivotal moment. Markets are listening. Stock futures, bleeding red Tuesday night, surged 1% after the news broke. Why? Investors smell hope. This isn't just a trade talk, it's a ticking time bomb. In 2018, Trump's tariffs wiped $1.7 trillion off U.S. stocks. History could repeat or reverse. Now, the bomb's bigger and ticking louder. It's a $3 trillion showdown at stake, with markets poised to swing 20% in either direction. The outcome could decide whether your investments soar or sink again. They're negotiating more than tariff rollbacks. Intellectual property protections, steel and chip trade, agricultural exports. It's everything. Let's talk numbers. The CEO language of Wall Street. Here's how different sectors stand to gain or lose from this deal. In the tech sector, relief from semiconductor export bans could send companies like Nvidia, Intel, and AMD soaring. Their share prices have been held back by trade restrictions, and a deal could unlock new growth potential. For consumer goods, companies like Nike and Apple, which rely heavily on Chinese manufacturing, stand to benefit greatly if tariffs ease. Lower costs could mean higher profit margins and a boost to their stock prices. The energy sector is more complex. Oil and gas exports might face new hurdles or opportunities depending on the outcome of the talks. Defensive ETFs like XLU, utilities or healthcare stocks like Johnson & Johnson provide safety nets if talks stall. Here's the silver lining. Treasury Secretary Bessent says the current tariff war isn't sustainable. The IMF forecasts 2025 GDP growth at just 1.8%. A bad deal, or no deal, could push the U.S. into a recession. If successful, this meeting could unlock 3% GDP growth, sending stocks soaring. History shows volatility is your friend if you play it smart. It's about your portfolio's survival. The question is, are you ready?